Good day everyone, welcome to a new update of me, Crypto Michael, real name Michael van der Poppen. Today we're going to discuss the markets, and the markets are relatively boring, which means that we don't have too much to say on the higher time frames, as I've been stating that a lot already. Before we're going to continue, I would love to share my Instagram page, which you can find in the description. I'll be going live during the next week to answer your questions regarding my personal life or regarding trading and everything that I do in my life. Next to that, don't forget to subscribe and check out the website that's in the description, which is the group that I'm the CEO of, where we provide educational content and trade IDs. Regarding the markets, what we see here is still the same as what we have been experiencing in the previous week. We have been seeing that the markets are relatively high, fueled by insane buyer's pressure from the institutions. MicroStrategy just announced that they have acquired another 50 million in Bitcoin, which is obviously a very bullish case. But overall, I'm looking at price action in general and not to news, as news is not a reliable source to trade on. I've seen many traders come to the office trading based on news solely, and they got crushed, as they are always behind. What we see here is still this weekly area around the all-time high, which is the resistance zone. We do have the levels that we've initially marked as interesting based on previous resistance levels that are on the weekly time frame, with the most important one around 14k to 13.5. So any of these levels are very significant if we get a corrective move. If we are not getting there, then probably we're going to skyrocket, we know. But the weekly time frame, the 14k level, would be very similar to 2016 support resistance flip, and we do know that in upwards trends, a very healthy support resistance flip of the previous resistance is expected. What is the chart to watch in general? If we get a corrective move, well, we can see that we are still heavily inversely correlated to the DXY, which means that the DXY is showing weakness. As the dollar is just collapsing, euro dollar broke above 120 during the week. If this one is going to show a bottoming construction somewhere in this area and there is going to be a bounce, I think other assets will be correcting from this point of view, as since this March crash the correlation has been inverse. So as I stated yesterday on the video as well, the chart to watch is the DXY and the BTC USDT. Then we're getting towards the lower time frame part, in which I'll just get rid of this one, as that's the weekly level we have to watch. Obviously, is what did we see yesterday? Well, we saw that 19.4 should have been acting as resistance. It did, and that's why we got another drop down. So I'm just making the range at this point so we can start zooming into the 15-minute time frame. What we see here is that yesterday we had to break above 19.450. That's what I shared as well on social media, as 19.450 is this range resistance that we could not break through. So we can see that the resistance was here as well. We tried to break through the high, which failed. We went towards the range low, another rally up, rejection. So what you see in the higher pick or in the higher time frame zone or in a broader perspective is similarly to what happened in this small one here. Rally up, resistance, failed breakout, previous resistance becoming resistance again, range low being a test. So what do we see here? Well, we did see the 19.450 as a resistance. Then we broke south, rejection of 19.150, also shared on Twitter, and the 18.6 test. So the range low test occurred here. Now, if we start to zoom out a little bit, we can see that we are inside a range, right? So we can define that this 18.5 is a clear breaker to hold on to if you want to sustain bullish momentum. 19.4 is the breaker that we need to break if we want to make new all-time highs. So at this point we're in a conflicting area, which means that higher time frames we're still making higher lows, higher highs. Lower time frames we can see that we've defined a lower high. So if we start to reject at this zone again, and preferably around the 19.3 area, through which we have to break south and reverse here. We might even do it at 92, but this area here, if we reverse there, we are making another lower high, indicating that we're going to test this support area for the third time. Testing the support area for the third time, if you are in such a high area, is not a bullish case, which means that the moment this drop down or this support is lost, I'm expecting a drop to occur towards the area of 17k. So that's the bearish outlook, and what we should be watching is 92 to 94. If that fails to break, I think we're going to be dropping in the next week towards 17k. If we do break through 19.4, I think we're going to see a continuation towards new all-time highs. But something to watch is that once, I'll just get a clean chart. Something to watch is that once Bitcoin starts to make that correction, altcoins do not follow. Altcoins are actually following through and are not inversely correlated, which means that we can see that ETH is also in a range-bound construction. We have failed to break above the range high, and we are currently trying to make a lower high, which indicates that the range low around this area, or it's very likely that we're going to tap into the liquidity below this range low. What we see is that this drop down happened during the recent slight correction of Bitcoin, which means that once Bitcoin is going to lose that 18.5 area, Ether will very fast come to this zone. That's a bad thing, as altcoins are still heavily correlated to Bitcoin at this point, but that's something you should be anticipating on in perspectives of how to move in these markets. How do you do that? Well, become a member of our group where we are sharing that. But in general, altcoins are not the play when Bitcoin is showing weakness or when there's volatility to be expected on it. Ethereum, failed breakout, rising wedge construction actually here. Bearish divergence could also be stated. And now you're looking at a potential resistance zone, most likely going to be at the area between 600 to 608. If we reverse there, we are likely going to test this support again, which is going to be the third time, as we've got one here, another one here, and a third test is most likely going to bring the price down towards a higher time frame level, which in this case is the daily time frame zone, which is defined around 470. So we are on a crucial path here, and the market is about to make a direction which is heavily relying on the dollar, which is heavily relying on Bitcoin. And when Bitcoin starts to move, altcoins will have that corrective move as well. If that correction occurs, it will grant massive opportunities into the market. So in general, patience will pay off. Higher time frames take time, and that's why you should be relatively patient in the markets and disciplined that you're not going to FOMO in. That's the update for today. I wish you a wonderful weekend. Don't forget to follow me on Instagram and subscribe to this channel, and I'll see you back for the new update tomorrow.